So I know you've been online and you've looked up videos trying to start day trading, right? But you find all these videos explaining it, but nobody really breaking down how to get started right now. So if right now you wanted to start day trading, how do you go about that exactly in this same moment? Well, this is the video for you. I'm AB Trades and I'm about to break down to you exactly how to start day trading if you want to start right now. All right, so first step, right? Before downloading anything, before looking at any apps, you need to ask yourself, how much capital are you allocating to this, right? So you need to set up an amount of money that you do not need, because at the end of the day, when you do start day trading, there is a high risk of losing it. It's just what comes with the game, right? Especially because even if you've watched all these videos, you've read all these articles or whatever the case may be, you still haven't done it yourself. And there's a big psychological factor that only time and experience will be, the one that gets you through that. So allocate money that you do not need in this same moment. That is step number one. So whatever amount of money that is, that's the amount of money that you're going to deposit and use to trade. You have allocated that capital that you know you're going to use for this, right? You need a broker, right? So you cannot just go into the markets and place a trade. It doesn't work that way. You need a broker. That's going to be the middle person between you and the markets. So there's different types of brokers, right? So there's regulated brokers and unregulated brokers, right? So regulated brokers are such as Oanda, TradingView.com, Forex.com. Those are regulated brokers. Now, here's the issue with regulated brokers, at least when you're starting. Well, they limit you to how much money you could actually risk per trade heavily, right? So there's something called leverage in this game. Well, regulated brokers, let's say on $1,000, will only let you risk probably around 10 bucks, right? So in the beginning, when you do get started in trading, the point is to make money. You need to make money, right? Well, in that case, you need to go in an unregulated broker. And the difference is with the regulated route, you could just deposit, with debit card or ACH, however the case may be. Well, in unregulated brokers, you need to deposit through crypto. Now, the advantage is that unregulated brokers, they allow you to risk as much as you want. So you pick the amount of leverage and the amount of risk that you want to put, which sounds like, oh, but I'd rather, be limited. No, in the beginning, you want to make money. All that controlling risk, I'd rather leave it up to you. So instead of letting the platform control how much you risk, I'd rather the trader itself control how much they want to risk. So in that case, unregulated brokers to me are the best alternative to go, especially when you're a beginner. So this is the unregulated broker that I personally use. It's called Vital Markets. I will leave the link down below in the description. You guys could use whatever unregulated broker you guys want. I'm just showing you the one that I personally use. Well, you go on this platform, you guys sign up. Once you sign up and create an account, then you'll have access to be able to place trades in the live markets. Now that you have signed up to a broker and now you have access to be able to trade in the live markets, you want to head over to TradingView.com. So you guys see up here, it says TradingView.com. On here, you do not place trades unless you're using one of the platforms that they recommend. So TradingView only works with certain platforms, not all of them. So unless you're using one of those, then you could go ahead and place trades directly on here. Well, let's say now, this platform is mainly for you to do analysis. So on this, as you guys see here, this is where you pretty much draw out your analysis. So here I draw out, for example, I'm in a bullish trend. This is an area of, support now because we're above that area. But at some point it was resistance back over here. This is where you pretty much do your analysis. This is where you come for you to pretty much understand where is the market is going to go. Now that you understand where the market is going to go, then you head over to your broker and you select which side is that is going to play out. So in this game, or at least trading, indices, forex, you're not physically buying things. So it's not like stocks where you're kind of buying shares or any of that. In this market, pretty much you're just predicting if price is going to go up or down. So buy, meaning going up, or sell, meaning going down, right? So that's what you're going to just select on your broker platform. And then on the middle, you guys will see that there's a lot size, right? So how do you determine how much risk to put behind each trade? Well, that's all relative to your account size. So let's say, for example, you have $1,000 trading account, right? You're not going to go ahead and risk $500 on that trade, because at the end of the day, if you lose, there's always that possibility you're going to lose half of your account. So that is not the one to do, right? So strategy that I use is risk around 20, give yourself 20 chances of whatever your account capital is. So let's say, for example, you have $1,000 in a trading account, divide that by 20, you're going to risk about $50 per setup, because there's a very low chance of you losing 20 trades in a row. I know you will hear a lot of advice out there of people telling you percentages, right? 1 or 2% of your account. When you're getting started in this game, especially if you don't have large capital, percentages are the biggest bullshit ever. Why? Because think about it. If you have $1,000 and they're telling you, oh, but risk 1 or 2%. What is 1% of $1,000? $10. Like, you're really gonna sit here and waste your time. In the beginning, you wanna make money, right? So the way I see it is, divide whatever your account capital is by 20, and that'll tell you how much you risk per setup. Now, once you start playing with the big boy money, so 100,000, 200,000, there, yes, percentages are more of a thing to do. So 1-2%, because you're still talking about thousands of dollars in just one setup. But when you first getting started, bro, realistically, you know, call it as it is, you want to make money. I'm just like you guys. I used to tow cars back in the day, 5 years ago. And when I was getting started in this, I'm not trying to sit here for $10, bro, respectfully. Like, I'm trying to make money. I'm trying to change my life. So I generally, you know, that's where I've realized, bro, that 1% thing does not apply to, you know, most beginners that are starting with low capital, call it as it is. So on this platform, tradingview.com, is where you're going to do your analysis, right? Just for you to have a visual. And then on your broker platform, that's where you're going to go ahead and get in a trade. Now, how do you know that you're risking $50? Like I told you, on a setup, right? Well, there's such thing called stop loss. So there's take profit and there's stop loss in this game, right? Take profit is an area where you think price is going to hit. Stop loss is an area where you want price to take you out if it gets hit, because you don't want to lose more than that amount. So I'll show you guys here on the charts, for example, right? So if I was to go here in a smaller time frame, let's say yesterday's trade, for example, right? So let's grab here yesterday's trade, which was this one, right? So this is a tool that TradingView allows me to use. So you guys can find it somewhere around here. So you guys see long position or short position. This is a long position, right? So where the green part is, that's telling me that's where I want price to go. Where the red part is, that's the part that I'm risking, right? So in this case, beautiful trade, right? Amazing trade. Well, this is called a stop loss, the bottom of this, right? So I'm risking 50 points. So I trade US 30. So I risk 50 points and I want to gain, you know, a 1 to 2, 1 to 3 risk to reward on that. So 2 times or 3 times the amount of money that I'm risking. So in this case, if I'm risking 50 points, ideally I want my take profit to be around to 100 to 150 points. How do I find that? So you guys see these numbers up here, you want it to get to like 150. So boom, right around there. So you guys see risk to reward ratio is a 3, right? So in this scenario, I'm saying whatever I'm risking, I'm getting 3 times that amount, right? Well, whatever my stop loss is, if it's 50 points, I'm going to multiply that by what's called a lot size. Now 0.01, at least in the forward space, is called about 10 cents a pip. Well, in the indice world, a 0.01 is $1 a point. So if I was to use a 0.01 in this scenario, I'm really risking $50 in this trade because I got a 50-point stop loss to gain, you know, $150 in this scenario. So that's how you calculate pretty much how much risk you're putting behind each setup. And it's really that simple. This is how you really get started day trading today. You can literally do this all today, right? And another question that I forgot to answer earlier was, where can you buy crypto, right? So I did mention you got to deposit in the broker platforms through crypto. Well, there's different platforms out there. You got Coinbase, you have Cash App that you could buy crypto on. There's wallets called Kraken as well. I personally like Cash App. It's quite cool. It only allows you up to $10,000 at a time. So if you want to, you know, mess with more than that, I will suggest the other ones such as Coinbase or Kraken. But pretty much, yeah, you deposit through crypto, send it over to your broker, and that's it. It's that simple. It's not complicated. You could literally start doing this today. Then once you have all this set up, then you could go ahead and start, you know, watching all the other videos where I go over, okay, risk management, how to game plan, you know, why traders fail. That's my previous video. You guys should go and check it out for sure. And yeah, and then all those other videos will make way more sense once you've watched this one. For those that are new here, I have a community of traders where we literally do absolutely everything. So if you guys see on here, I have a course that I have created. Then on top of that course that literally runs down everything beginner friendly, right? On top of that, you get access to the Discord where we all communicate. So this is the chat section. So this is where we all literally just share analysis, share ideas all day long, so on and so forth. On top of that, we have a profits tab where we all share profits, you know, as well throughout the days. And then on top of that, we record and we send the recordings as well. So we live stream every single day, Monday through Thursday, every single New York session. So I pretty much have this whole entire community for $149 a month. So I'm not charging you thousands of dollars because I want every single one of you guys to learn, right? This is more than just a course. Yes, you have access to my course. Yes, you have access to a community and all that, but I want to build something bigger than that. I want every single person out there to have real knowledge and really have pretty much a mentor, right? So that's pretty much been the biggest negative to a lot of you guys is, oh, I don't have money for a mentor because they all charge thousands of dollars. Well, I pretty much grabbed that, threw it out the window, and I'm like, you know what? I'm gonna make it affordable for absolutely everybody. So there's no excuse excuses. You guys can be part of the community as well. Link will be down below. And if you guys enjoyed this video, make sure to leave a like, subscribe, leave a comment, and I'll see you guys in the next one. Peace.